Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Karnataka Bank, hosted by Investec Capital Services. We have with us today Mr. Mahabaleshwara MS, Managing Director and CEO, Mr. Balachandra YV, Chief Operating Officer, Mr. Gokuldas Pai, Chief Business Officer, and Mr. Muralidhar K. Rao, Chief Financial Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mahabaleshwara MS, Managing Director and CEO. Thank you, and over to you, sir.
Thank you, ma'am. Good evening to all of you. A warm welcome to each one of you for the Q3 results Concall of Karnataka Bank. I'm happy that third quarter also has been another quarter of success, and also this is a successive quarter of satisfactory performance and consistent results. Our efforts in successfully navigating through the COVID-19 affected economy is yielding desired results without any major negative surprises. As in the previous quarters, this quarter also we continue to focus on asset quality improvement as well as credit growth and digital initiatives. As far as asset quality is concerned, let me briefly touch upon the NPAs, SMAs, and the restructured loan book. As far as the gross non-performing assets are concerned, during this particular quarter, it declined by rupees 170.60 crores from 2,501.12 crore as of September 21 to 2,330.52 crores as of December 21. So in percentage terms, there is a 39 basis points decline from 4.50 during the sequential previous quarter, that is as of September 21, to 4.11%. Similar trend is also observed in NNPA, which has gone down by rupees 186.22 crores from 1,546.11 crore as of September 21 to 1,359.89 crore as of December 21. So percentage-wise, here also we have seen a 39 basis points dip, that is from 2.84% as of September 21 to 2.45% as of December 21. As a result, the slippage ratio has further improved to 0.56% from that of 0.88% as of September 21. And the credit cost also has improved to 0.20% during this quarter from that of 0.24% during the sequential previous quarter. When we look at the SMA2 portfolio, during March 20, we had SMA2 of 3,453 crores, which was constituting 6.60% of our performing advances. This has come down to 1,393 crores during March 21 and representing 2.78% of the performing advances. And now, as of December 21, it is at 1,155 crores, which constitutes 2.13% of the performing advances. Similar trend is also observed in SMA1, wherein we had 5.32% of the performing advances under SMA1 during December 20, that is an year back, that is 2,785 crores. And it has further improved to 4.35%, that is 2,181 crores as of March 21, and the latest number is 1,487 crores, which constitutes 2.74% of the performing advances. So here I should say that mainly on account of improved credit monitoring mechanism, we have been able to contain the SMA, contain the slippages, as well as contain the NPAs. As far as the restructured advances portfolio is concerned, our total restructured advances portfolio constitutes 4,690 crores, inclusive of 319.90 crores NPA. And this is 8.27% of our GBC. And for this entire portfolio of restructured advances of 4,690 crores, we have an overall provision coverage of 16.10%. And here, the NPA is 319.90 crores. That is, it constitutes around 6.82% of the restructured book. However, for this NPA of 319.90 crore, bank has a provision of 53.53%, amounting to rupees 171.24 crores. As far as credit growth is concerned, year on year the growth is 4.40%, and for the current year, that is 9-month period, it is at 5.44%. So some positive traction is happening in the credit area. The important growth sectors for us during this 9 months period is mainly drugs and pharma sector. That is, it has grown by 49.41%, and NBFC sector has grown by 46.12%. MSME sector has grown by 27.93%, and the gold loans have grown by 15.40%, contractors loans by 9.09%, and agri crop loans by 5.59%. Hence, on account of positive traction in credit and improved asset quality as well as reduced slippages, the net profit has gone up by 8.27% to rupees 146.57 crores from rupees 135.83 crores as on 31st December 2020. During September 21 quarter, our net profit was rupees 125.61 crores. That is a sequential quarter. Thus, during this sequential quarter, the net profit growth is 25.61%. That is from 125.61 crores as of September 21 to rupees 146.57 crores as of December 21. Another important development is in the area of CASA. Of course, CASA is consistently improving. It is now at 31.30% as against 30.88% as of September 21. PCR has also further improved. As of March 21, it was at 70.05%. September 21, it improved to 71.75%. And December 21, that is the latest, 73.74%. CRAR, we had 14.85% at March 21. Now it is 14.15% excluding the current year's profit. If the current year's profit is also accounted, it will be 14.87%. That is almost at the same level as of March 21. As far as the digital initiatives are concerned, our digital transactions to total transactions, it was at 83.50% about a year back, that is as of December 20, and now it has further improved to 92.64%. Of course, digital underwriting of loans is on a positive track. KBL Express Home Loans digital underwriting has further improved to 68% of the total loans sanctioned on day-to-day basis. Car loans 78%. Cash loans of KBL Express cash loans, that is the salaried class, it is 100%. MSME loans also, we have been able to have digital underwriting to an extent of 70%. So all in all, our effort will continue to focus more on credit growth, CASA, asset quality improvement, and digital banking initiatives in accordance with our transformation journey, KBL Vikas 2.0. Yes, with this brief opening remarks, now the forum is open for further deliberations. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yashwant, an individual investor. Please go ahead.
Hello.
Hello, Yashwant.
Yeah, hi, Mahavideshwar. Good set of numbers. But the only concern that I have is still I see that the restructuring is on rise from 3 quarters. So that's my first question. And the second question is about the initial goal that we had that no overall business we would be able to do to like 1,45,000 crores or otherwise 15%, 12 to 15% of growth for this fiscal. So do you still think that it is possible to achieve that in this fiscal, having the current situation in place?
Okay, you have 2 questions. One is on the GECL, second one is on the growth. As far as first one is the restructure, not GECL. As far as the restructured advances is concerned, Mr. Yashwant, last time I had told that another 600 crores worth advances have already been invoked for implementation during this quarter. As against that 600 crores invoked for restructuring, so eventually we could get the applications as well as the implementation for only 330 crores. That is the first one. So that means the restructuring has not gone up as originally we had estimated. And of course, as I said, the restructuring advances portfolio is continuously engaging our attention. We have already constituted a restructuring asset management cell, and as a result, the restructured advances portfolio, the stress is also significantly coming down. If you look at the September 21 restructured advances NPA, it was 359.19 crore, and this was constituting 8.25% of the restructured portfolio. And now it has come down to 321.40 crores, which constitutes 6.85%. Similarly, the stress of the restructured advances under the SMA2 category, it was September 21, it was 9.22%, and now it has come down to 8.07%. So the restructured advances portfolio is not causing any concern, but a continuous vigil is a must that we are exercising. As far as the second question, that is the growth is concerned, yes, we are still committed for this for the simple reason we had good number of undrawn balance, especially in the credit, during the December 21 period also. In fact, the undrawn balance in the OD limits, that is 1 crore and above, we had about 4,434.98 crores, and the unavailed sanctioned limits to an extent of 3,293.78 crores. That means all put together 7,728.76 crores. So because of the sudden spurt in the Omicron and other things, negative sentiments observed in the economy as a whole, so borrowers just deferred their drawing to this particular quarter, and we are seeing a consistent growth in the credit since last 2 weeks. That is the second fortnight of the current month. I am optimistic about this. So that is why we are not going to revise our business estimates for the current financial year. I am very confident that we will be able to see a robust credit growth during this quarter.
Okay. And from past 3 weeks or otherwise, we have been talking about bringing some institutional investors, to as stakeholders. So, are there any real good interest on this front from the investors, or otherwise, we are still would want to get into a good numbers, and that's when we would want to raise the capital?
Yeah, regarding capital augmentation, you know very well that we already have shareholders' consent. A view will be taken at appropriate time by following all the due process.
Okay. Yeah. And sorry, one last question with respect to the CCD exposure. So I remember that in Q2 you had expected that that account to be performing asset. So is it the same, or otherwise we are still hoping that to be a performing asset?
It is still continuing as an NPA, and there are certain proposals for its revival also, as well as the repayment by disposing of the assets which were mortgaged to us. We are exploring both.
Okay. Yeah. Thanks, Mr. and all the best.
Thank you.
Thank you. The next question is from the line of Yash Dantewadia from Dante Equities Research. Please go ahead.
Hello.
Yes.
Yeah. Hi. So I just wanted to understand in terms of loan growth, what kind of guidance can you give? You've given a guidance of I think 12 to 15% earlier. So I think that is something I want some more clarity on. That's my first question.
I still hold on to the earlier guidance.
And you think the majority of this loan growth will come through digital underwriting?
No. Digital underwriting we are doing only for the retail advances of up to 5 crores ticket size. So
okay.
Almost my aim is to have 80% of our digital, 80% target for our digital underwriting going forward. It may happen within a year or so. So that is one area where the growth we are focusing, that is the retail sector. But our major growth during this current quarter is going to come in the mid-corporates, that is 5 crores to 100 crores ticket size.
Okay. Also, in the investor front, you didn't really answer the question in terms of how is the interest looking at. I mean, obviously, I know you won't get into specifics and you can't get into the specifics. But in terms of interest front, like what kind of interest are you getting from the market? Because the last update that I remember you gave in a Concall is when you said that investors are going through the loan book, right? Like they're going through the data, etc., etc. Am I right about this?
No, as I said, all efforts are being made. So since we already have the shareholders' consent, we will be taking a view at appropriate time by following all the due process. So there is a lengthy process; it has to be followed.
Yeah, I get that. I just wanted to know in the interest front or what kind of interest issue. But okay, I get that. Also, coming to the loan growth front, the loan growth in this quarter has been pretty average. So is there no demand for loans, or and you're still holding on to your previous guidance? So can you tell me how you're going to go about it? What are the initiatives that you're taking to go about the 12 to 15% guidance?
See, the loan growth, especially the loan origination, is robust. As I said, I already have a very significant amount of undrawn limit as well as the unavailed sanction limit. So the borrowers had temporarily postponed its availment, which is now seeing a positive traction. So as a result, I am confident that we should be able to clock the guidance, credit growth guidance, whatever that we had set at the beginning of the year.
Also, that'll be all. I'm really happy with the gross NPAs and the net NPAs coming down significantly. And since you're sticking to the guidance, that is the icing on the cake. Thank you so much.
We have been consistently performing. I think in all these areas, if you look at all the previous 3 quarters, there is no negative surprises, and the growth is happening in the desired sectors. That is what we have all disclosed in our analysis of financial results.
Yes.
And
yes, definitely. Also, there was this coffee estate. NPA. I think about 100 to 120 crores. You were expecting the repayments coming in soon. Is there any update on that?
No, we had already received about 17 crores during the Q2. And this is efforts are going on. They are also making efforts. So there will be either restructuring of that or there will be repayment by disposing of their assets.
Okay.
Is also being examined by the present promoters.
Okay. What percentage of your net NPA is that? If you can give me some insight in the terms of amount. What amount is pending?
You want to know the percentage of that exposure to the net NPA?
Yeah, you can either tell me the percentage or you can tell me the amount. Both is
that we have provided fully, and it is technically written off also. It is not forming part of the net NPA as of today.
I'm aware. I'm aware that it's written off, but I was just hoping on getting the amount since because if it comes back into the book, it's obviously a profit, right?
Yeah, it is around 100 crores.
100 crores. Okay. Thank you so much. And if I'm looking at when I'm looking at the other banks performing and the way they have performed, I think especially in a small market capitalization bank like Karnataka Bank, I think we've outperformed most of the other banks in terms of constant profitability and the NPAs are pretty low if you compare it to some of the other smaller banks. So I'm really happy with that. Thank you so much for your effort and guiding.
Thank you for that critical observation.
Thank you. The next question is from the line of Manish Sariwal from Fiducia Capital Advisors. Please go ahead.
Yeah, very good afternoon. Am I audible?
Yes, sir.
Yeah, thank you very much for this opportunity. Continuing from the previous conversation, I would like to compliment the team for the splendid efforts that are being put in. Having said that, I would like to understand in a little more granular manner the opportunities that Karnataka Bank finds for loan growth. I see, when one looks at all the banks, starting from HDFC and the SBI at the top, and then going down to the other banks, there is such a tremendous strive and fight for business. And obviously, their cost of money is also significantly lower. So what are the pockets which are basically giving you the confidence of good growth, which is also secured and not risky?
Yeah, from this very interesting question, from this point of view, our thought process and action as of now is we will be exploring more and more options under the co-lending. Apart from that, I have indicated certain areas where we have shown in the past a good credit growth, like MSME, gold loans, loans to the contractors, agricultural loan, agricultural ancillary activities, and all such things. Majority of the ticket size, what we are exploring, it is falling under the retail and the mid-corporates, and we are taking very, very conscious and conservative steps in taking a huge exposure of above 100 crores. That is number one. Number two, we are focusing on those states. Last time also I had mentioned that we had zeroed on about 12 states across India for our credit growth, where our track record of the credit monitoring in those states as well as the credit quality in those states are satisfactory. So that is the geographical sectors that we are exploring along with the particular these loan sectors. So that is why I said all efforts have started yielding. In fact, December also there was a very good growth credit origination. So I am confident that all will get converted during this quarter, apart from additional credit origination during this quarter. The only thing what we are very carefully observing and watching is there any fourth wave of COVID-19 and what is in store for the entire economy in the ensuing budget also. But of course, these are all the external factors. But as far as internal things are concerned, myself and my entire team is totally charged up as far as ensuring the qualitative growth is concerned.
Wonderful. Thank you so much for sharing these thoughts with us. My only, if I may just ask a small follow-up, you mentioned about finding opportunities in the co-lending space. What I understand there is that say if there is a consortium kind of a lending, or if there is a multiple banking kind of a situation. No, but not. Meaning, how exactly would you look? What exactly are we meaning? Can we say that we are looking at co-lends?
No, it is not consortium. We will be having tie-up and a specific MOU with respective NBFCs. So generally, 80% of individual loans that we can lend. So this is as per the co-lending guidelines of the regulator.
Oh, I understand. So you're looking at the NBFC tie-ups, right? But I assume that that space is not going to be very risky because the NBFC financing is typically in the areas where the risk is little on the higher side.
You tell me one area where there is no risk.
That is also very true, sir. That is also very true.
See, we are into the business of risk only. But only thing
right.
Always a calculated risk, and we have all the precautions of mitigating the risk also.
No, that is wonderful. So that is wonderful. Sir, in fact, the previous participant basically was trying to understand that while obviously, like in the process of raising finance and equity, it's a full detailed process and all that is very important. We understand that. We all understand that. What I think he was trying to understand, which exactly is also my request, is to understand as to how is the investor community looking at you. See, the point is that if you look at various parameters, we find that at all valuation parameters we are like very, very undervalued. Okay, so at one end of the spectrum, I think that we already have a CAR about 14+%. Then why do we need to dilute at such an undervalued price? But then I also then go back to your previous conversation that we had with you, wherein you said that that a good investor or a bigger investor will basically add a qualitative qualitative flavor to our bank, which will basically improve the valuation multiples, etc. So this question basically is emerging from that side as to when now we have demonstrated our intent of raising or getting in an investor, how is the community, which is like desperately looking for good deals and all, how are they? What is the interest from their side? If you could just share your thoughts on that, that would be like very helpful.
I will answer this question at appropriate time.
Okay, we understand that. So all the very best to you. We have been a long-term investor and we continue to remain so. So we are really hoping for some tremendous returns now. Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations on a good set of numbers. My first question is about the restructured book. Is it fair to assume that it has now sort of completed in the sense that there are no more addition that will happen in the current quarter, or is there some more to be added to it?
Rajesh, as per regulators' guideline, restructuring process should be completed latest by 31st December 2021. So restructuring all eligible accounts invocation should have completed by September 21 and implementation by December 21. And we have totally adhered to the regulators' guideline. Next.
Does that answer your question, Mr. Rajesh?
I think he is not getting. You can continue, madam.
As the participant left the queue, we'll move to the next question, which is from the line of Sushil Choksey from Indus Equity. Please go ahead. The participants have placed the call on hold. We'll move to the next question, which is from the line of Ajay from Demo Advice. Please go ahead.
Yeah, hi. My question is regarding the first thing is, what I can see is the interest earned has just increased from 1554 crores to 1565 crores, if I'm right. And the main increase in profit before tax is just as we have decreased the provisions, as we are seeing less number of NPAs. So what is your guidance going forward? Will the number of NPAs be reducing? And the reason for just a slight increase in interest earned?
Yeah. See, there are two issues. One is as far as the slippage. So we have been on the consistent track during this 9-month period. And in all probability, there will not be any negative surprises going forward. Second one is the net interest, interest income. So you are aware that interest income during this last 1 year, it is almost flat. We had, of course, December 90, our interest income was 1,595 crores. And December 21, our interest income is 1,565 crores. Here the main reason is the yield on advances has come down because of the severe competition for good assets in the market. So my yield on advances, which was at 9.39% as of December, has now come down to 8.81%. However, we have been able to hold on to our interest spread by reducing our cost of deposit. So that is why, in spite of there is a reduction, a significant reduction in the yield on advances, we have been able to maintain and manage the interest income. Going forward, when this credit base itself enhances, I think we should be able to improve this interest income also.
Okay. Thank you. Thank you so much.
Thank you. The next question is from the line of Sameer, an individual investor. Please go ahead.
Thanks for giving me opportunity. I have two questions. What is the reason for decrease in fee income by almost 100 crores? And second is, why is there an increase in employee cost compared to last quarter? Thanks.
Yeah, fee income last time, we had a good trading profit. See, December 20, my trading profit was 89.81 crores, whereas this year, this quarter, it is just 1.86 crores. Of course, this is an area where we are now focusing. We have already shifted our treasury to Mumbai, and going forward, we will be able to do well in this also. That is the reason why there is a decline in the other income. Sorry, your second question?
Increase in employee cost as compared to previous quarter.
Yeah. Employee cost compared to previous quarter, it has not gone up significantly. We had 267.25 crores as of last year, that is December 20, and now it is 256.90 crores. Of course, compared to September, it has slightly gone up. Otherwise, employee cost, salary-wise, there is no much increase. And superannuation benefit also, we have been able to hold on to the same position compared to December position. But there was another thing, I think, which you might have noticed. There was a requirement of a family pension, additional family pension that was supposed to be made. And the regulator has also given an option of amortizing that family pension over a period of 5 years. In our bank, what we did is we had calculated that around 23 crores. So we didn't opt for the amortization. So we have absorbed that entire amount during this quarter itself. That is the plus point there.
Okay, thanks. So it's basically good accounting practice.
Welcome.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Deep Shah, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. So I have a few questions. So my first question is on the core fee income. So can I just know the reason for the decline in the core fee income, which has come down sharply from 268 crores in 2Q to around 194 crores in 3Q on a sequential basis? And what are the components that is dragging it down? Also, if you can share the breakup of the same.
Yeah. See, this other income, that is the core fee, it is not just the core fee income, it is also inclusive of the technically written recovery under the technically written off account. So during the September 21, we had recovered about 104 crores under the 104.01 crores under the technically written off accounts, whereas during the current quarter, it is 51.18 crores. That is the main reason why there is a nominal decline in that fee income and other incomes.
Okay. And sir, can you give the guidance, FY23 guidance on the loan growth, credit cost, and ROE front?
FY23, we have not yet published it, so I'm sorry.
Okay. And I have a few other questions on the asset quality. So what will be the ECLGS outstanding by the end of the December quarter, and what portion of it would have slipped into NPA?
You want the clarification in the GECL portfolio?
Yes.
Yeah, GECL I said, no. You see, under the GECL, our NPA is 390.30 crores, which constitutes about 2.34% of the entire GECL portfolio. No, GECL. See, GECL actually, our disbursement under GECL is 2,100 crores, and to the borrowers, the total exposure is around 16,702 crores. So of that, because the NPA, if even the GECL account becomes NPA, entire borrower's exposure also becomes NPA. So as a result, the NPA is 390.3, that is around 2.34%. Here what happens in the GECL, there is 100% this recovery through GECL corporation. We have started lodging our claims also. So, but there is certain procedure to be followed. That also we have done. But this portfolio is showing significant improvement in terms of SMA2, SMA1 and all. So it's all because of the improved recovery efforts and the mechanism.
So FY23, so you don't have the guidance, but is there any internal estimate on the PAT front?
We do have. At appropriate time, let me discuss it.
Sure. Sir, one last question. So on the capital raising front, so what is the validity of the bank's approval for raising capital? What is the deadline for that?
That is up to what date? September 1st of September 2022. 1st of September 2022.
Thank you, sir.
Thank you. The next question is from the line of Sudhir Mahajan from Mahajan Family Office. Please go ahead.
Good afternoon, sir. How are you, sir?
Good evening, Sudhir. Thank you so much.
Yeah. Congratulations. It's a decent set of numbers, and I'm sure we'll have better numbers in the ensuing quarter.
Yes, definitely.
One is I welcome you as a shareholder into the thing with your ESOP that you have taken. Yeah, 79,000 ESOPs. Could I know the price of this ESOP, number one? Number two?
That is my ESOP.
Yes.
ESOP price. It was at market price.
Market price on the date of allotment.
Yes, sir. It was purely on the market price on the date of allotment.
Yeah, that is that all your ESOPs are at market price, right?
Yes. No discount was given.
Yes, sir. That is as per the ESOP pricing.
Yes,
so,
correct.
it is very heartening that you have exercised your ESOP. So you're showing a lot of confidence right now on the ensuing quarters and this thing.
I have put all my savings there.
That's what I'm saying. That is why I said it, sir. That is why I brought it out.
Yeah.
So, okay, the next part is, what would be the PCR by end of March?
Sir, PCR, we would definitely maintain it at above 70%, but our endeavor should be to take it to a level of 75% over a period of next 2 to 3 years. We are in the accelerated provision mode now. That's why during this quarter, while finalizing the result, all the future, almost majority of the provisions of the future also we have front loaded. As I have made it clear that family pension, there was a provision for moratorium over a period, amortization over a period of 5 years that we didn't opt, and entire 23 crores we have absorbed. And there was also a requirement of NPS increase from 10% to 14%. That also we have absorbed. And over and above, we have also made certain accelerated provision for our NPA portfolio also.
The next question is, you have some NPAs and ILFS and Fintechs. How is the resolution of those two going, and do we expect to recover anything from that?
ILFS, yeah. That is, I think we are one among all the consortium banks. So in the entire banking industry, it is going in a forward mode. So if it happens during this quarter, we will be getting some recovery under that. But individual bank as such, there is no recovery effort. It is all consortium.
Yeah, obviously.
And of course, that is again fully we have provided. And if it comes, definitely, of course, one or the other day it has to come. So that is going to help to improve our bottom line.
What do you think would be a recovery on that account, sir?
I am optimistic, sir.
And about Fintech?
There also.
Will be having some recovery?
No, so far no, but recovery efforts are moving in right direction.
Okay. Thank you, sir. Have a nice year, and thank you for.
Thank you.
Thank you. The next question is from the line of Sushil Choksey from Indus Equity. Please go ahead.
Sir, congratulations to team and management of Karnataka Bank stable result. Sir, listening to all the Q&A so far, where is our transformation journey, the current phase likely to get over before we get to the next phase?
Transformation journey, it started about 2 years back. We have completed the first phase of KBL Vikas 1.0. In the first phase, we focused more on the holistic transformation of the bank. That is why you are seeing all these positive numbers now. There we focused more on credit transformation, our HR transformation, and the IT transformation, as well as the customer experience transformation. So now we are in the second phase of that transformation, wherein we are purely focusing on the digital transformation. That is why I said all the digital underwriting of the loans, as well as the digital onboarding of our SB customers. We have already introduced tab banking as well as the web banking. There also, now at present, around 53% of my day-to-day SB accounts, they are getting opened through the tab and the web bank mode only. So in this second phase, we will be opening our analytical center of excellence at Bengaluru, and a lot of initiatives have already started, and even my board also making a very thorough review of all these initiatives. That is why we are aspiring to emerge as the digital bank of future during the next 2 to 3 years period.
Sir, you are housed in a state of Karnataka, which is the Silicon Valley pronounced by the world, where Bangalore and Karnataka and Mangalore is concerned. How are we taking the benefit which is reaping to the state in terms of so many startups, unicorns, unicorns which are emerging from our state, and which is, they have so much of money coming in which can support not only the state but the bank like Karnataka?
Yes, 100%. I think your thought process as well as our action, both are on the same page. We have tied up with a good number of startups as well as fintech company. That is why we have housed our digital center of excellence as well as analytical center of excellence at Bengaluru. And that we are getting lot of positive vibes from these centers. And all these products, whatever that I am telling, these are all developed in-house. So that is the advantage for us.
Sir, in the digitization journey, you said you will be starting co-lending. I'm sure that would be under digital process along with the 100%. Partner who would come in 80-20 ratio or whatever the ratio you decide with the partner. Yeah. What kind of business segment are we looking at? Education, gold, MSME, personal loan, neo-banking? What kind of partnerships are we looking at?
As of now, it is the early, this breakthrough is made in gold loans, in MSMEs, and in the areas of the home loans. These are the 3 areas where we are in advanced stage of co-lending arrangement.
So do we look at, all these unicorns which are forming in your state or in country in India today have equity money, but there is no debt support because new businesses don't get that kind of support. Have we looked at any such kind of business partnership?
As of now, no. I should be honest. As of now, no.
Okay. My last question, sir, to the core business improvement. I see South India being a prominent saving community as a part of journey from India. Nationalized banks have reached 40, 45, 47, and the banks which are even in PCA reaching 50% CASA. How are we trying to improve from 30s to 40s to bring down our cost to income?
Yeah, see, of course, our core area of household CASA, that will continue. And added to that, we will be having our own government agency business cell housed at Bengaluru to capture this market of enter not only the South India but also wherever that we have identified as the prospective states for us. So that is why I am confident that going forward that CASA traction will be on the expected pace.
No, but sir, when you are talking of so much of digital initiative, will not bank attract few lakh current and saving account customers who will get all the facilities, whether it's mutual fund subscription, trading in shares, insurance, car loans, housing loans, all that can be connected. So are we making an effort for pure retail 5 lakh, 10 lakh, 20 lakh kind of current account saving?
So that is very much happening. See, now actually we are in the midst of our CASA campaign itself. So for which kick-started on 16th of November 21, which will run up to February end. So far, we have been able to onboard about 3.5 lakhs new customers for CASA. So that is the effort that our team, field level team, wherein we have a dedicated regional sales executive for CASA and the CASA marketing officers, all those separate vertical is already in place. That is definitely going to continue and it is also going to continue give us a good result in the days to come.
So how are we empowering our youth or talent of Karnataka Bank or human resource for digital banking or credit banking or various initiatives which we are likely to benefit over a decade now?
Multi-level activities are happening. At the entry level itself, they are properly introduced for the digital banking, and the existing manpower skill upgradation is also going on. We have our own e-learning module for all our staff members. Besides that, we are also encouraging and taking effective steps for capacity building in each of the core areas of banking.
Thank you, sir, for answering all my questions with all your patience, and all the best. Hopefully you do very well for years to come.
You are welcome.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Sorry, my line dropped and I could not listen to your answer. So if it's okay with you, do you just mind repeating that?
Please, Rajesh.
My question was regarding the restructuring book. If it has peaked now, or do you see more addition to it?
No, as I said, so this restructuring exercise, as per the regulatory guidelines, it is completed by 31st December 2021. So there will not be any spillover effect as of now, unless and until the regulator comes out with one more restructuring package. That is not in my hand.
Okay, but are you anticipating something like that, or you are just saying it in case they do it?
No, external, so many factors are there. No? Say, for example, this Omicron, all of a sudden there was spurt, now it is receding. So we have to adjust ourselves to the external factors. I don't have any control over that.
Sure. Okay. And then on the last call, you had said that you are expecting around 10% of this restructuring book to result into NPAs. What is the take on that estimate now?
That will, going forward, it will come down because as of now, in the restructuring book, the NPA is around 6% only. As I said, we have further streamlined all our market, it is monitoring activities. I don't foresee any sudden spike in either in the restructured book or in overall my this advances portfolio.
Okay. And I don't know if you answered this, but what was our exposure to Cafe Coffee Day, which I believe you have taken complete write-off on?
Yeah, it was about 100 crores.
100 crores, okay. And then all these cases which are being in the limelight, like ILFS, Syntex, PCB, and other such, DHFL, let's say, what would our total exposure would have been for which we have provisioned 100%?
We have reasonable exposure, but only comfort level is we have provided fully. In fact, my overall NCLT referred accounts exposure itself is 1,185.08 crores. For that, I am having almost 100% provision. I think
okay.
95%
Oh, that's
or so.
Okay. And then just a couple of questions on the equity raise. Since you have time, should we assume that the equity issuance is likely to be less than one-time book value, which is like 258 rupees now?
I didn't get your question. Will you please repeat it?
Sure. So our book value as of this quarter end is 228 rupees.
Correct.
Right. So the question is that should we assume that the equity issuance to our incoming investor will be less than this particular value?
No comments.
Okay. And then secondly, if I may ask, are you in active conversations with some investors right now, or this is just an enabling resolution at this point in time?
Yes, that is a part of my job. Always I will be in touch with the investors, whoever is interested. So ever since I assumed the charge, since last 5 years, I am doing that job also.
Okay. And finally, what is the ideal size from your perspective of a equity raise? How large will that be?
At present, no comments.
Okay. All right. Thank you so much, and all the best for future quarters.
Thank you. The next question is from the line of Jai Mundra from B&K Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. I have a couple of questions. Very well, sir. How are you?
Thank you. Fine.
Great, sir. Sir, first on, if you can provide some more detail on slippages. I mean, where are these slippages coming from? Any, broad breakup?
See, slippages this quarter, none of the advances of above 15 crores have slipped to NPA. All the slippages are below 15 crores.
Below 15 crore, right? 15.
Yeah, 15 crores. Below 15 crores. So that is how we have been managing the portfolio. I think a couple of quarters back I had told that above 50 crores, no slippages. Last quarter we had focused on 35 crores level. This quarter it is 15 crores and above. No slippages. It's all below 15 crores ticket size.
Sure, sir. And on recovery, sir, is there any lumpy recovery in this quarter? Or again the recoveries are also...
This quarter, no.
Okay, sure. And sir, on this slide 30, if I see, provision breakup, does this fair value of -8 crore, is it MTM on bond book or what is that? Yeah, because I thought the bond book MTM is now supposed to be taken in other income.
Is provision and contingencies, NPA is 111.75 crores. Standard advances 34.80. Fair value, this is right back, 7.81.
Okay, right. Understood. And do you had any this MTM loss on bond book?
MTM loss this quarter, only depreciation on investment, that's all. Maybe.
Yeah. Sorry, what was that number, sir? And does this come in other income or does this go to provisions now?
During this 9 months period, it is something around 50 crores depreciation.
Okay, and now this becomes a negative line item in other income or this comes in provision only?
It comes as a
negative line item only.
As per the revised guidelines.
Yeah.
Understood. And the last question, sir, from my side is your growth, right? So, if I look at growth driver for this quarter as well as previous quarter, it looks like that you are growing in corporates with ticket size above 100 crore, right? So, in your, if I back calculate the number, you have given pretty much detail on the loan growth, loan book. So, if I calculate, then it looks like of your 1,000 crore incremental advances increase, around 900 is coming from corporate, which is above 1 crore. So is that understanding right? That so far, as of now, you are focused, whatever opportunities are there mainly in corporate at this point of time?
These are all 5 crores and above ticket size. There are some corporates who have taken about 50 crores, 100 crores and all such things. So some of the corporates, they have availed the limit that was sanctioned, and the rest of the things they are availing during this quarter. So growth will be more even during this quarter. Especially I am expecting the growth to come from the mid-corporate advances as well as the retail advances.
Right. So the reason why I'm asking, sir, it looks like that large banks, they are competing, or they are, their pricing has become very competitive when it comes to 25 crores and below SME loans. So have you, what is your, have you also seen such higher competition from large private banks?
That competition is very much there. That is why I have also given its impact on the yield on advances. But we have our own nice areas, and we will continue to focus on that. And that is our USP.
Right. Great, sir. And thank you and all the best, sir.
Welcome.
Thank you. The next question is from the line of Anshul Sehgal from Kotak PMS. Please go ahead.
Good evening.
Good evening,
Sir, I have 2 or 3 questions. If I look at your, initial comments where you said that growth has come in because of somewhere close to 45% growth in NBFCs. Now,
yes.
What NBFCs are these? And how are they rated? Are they government, private, and is there, what kind of risk are we assuming when we are growing in NBFC?
Yeah, Anshul, I think we have given a detailed disclosure in our this analysis of financial results which we have uploaded in our website. I would draw your attention to slide number 37 there. NBFC portfolio, we have 69 accounts. Of that, 67 accounts are BBB and above rated. So there you will come to know what is the risk weight that is assigned. And even I have told what is the NPA there and the SMA2 and the restructured book. Entire NBFC portfolio, we don't have any restricted advances. We don't have any accounts in SMA2. Why SMA2? Not even in SMA1. And only one account that is under NPA. That is also fully provided. That is the portfolio as of now.
Right. And you also mentioned, sir, in the previous comments that you are looking to grow in the current quarter in retail and SME segments. But then if we look at the reason why credit has not grown in the previous quarter, that is the third quarter, it is because of, as you mentioned earlier, that corporates have not drawn on their limits. And so in the current quarter, corporates who draw on their limits, they will be, that credit is what we will see as growth in the current quarter. Now, how do we kind of align both these aspects? That will we grow because of credit in corporates, or will grow because of retail and SME? How should we look at it?
Yeah. See, I have made our priorities very clear. We would like to see more and more qualitative credit in the retail sector, that is up to 5 crores ticket size, and also in the mid-corporate sector, that is 5 crores to 100 crores. So we have already lined up and sanctioned also good number of proposals in this particular sector, and they are all now in the disbursement mode. Apart from that, credit generation activity is also going on in full swing by all the regional sales executives headed by the national general manager heading this national marketing activity also. So that is why we are confident that there will be a balanced growth in almost all the areas wherever we are targeting as the preferred sectors. We have this sector prioritization exercise also, wherein we have identified the sectors where we want to grow. That has already been disseminated to the field level functionaries, and we are focusing only on that area.
Right. And sir, if we were to look at, some of the larger banks and the results that have come out so far, there has been no impediment to credit growth in the current quarter, and even for the future quarters, the growth estimates that they have been giving are quite strong. Now, again, that is in our results versus some of the other banks that have come out with their results. There is a bit of a dissonance that in the in the previous quarter, we have not been able to grow credit in line with market. How should one see that? Is it just a spillover into the next quarter, or is there more to it?
100% correct. In the sense, my credit growth on year-on-year basis has been 4.40%. Since last 9 months of the current year, it is at 5.44%. So that is a clear-cut indication that there is a positive traction. But as I said, the undrawn and unavailed limit would contribute during this quarter. And I think the acceleration would happen during this quarter, and we will be at par with the national average.
Right. And my final question, sir, on the restructured book, I recall in the previous quarter's call, you had mentioned that in that book we will start seeing reduction, and I think you had mentioned that at least 10% reduction will be seen in the current quarter itself. Now, again, the feeling one gets is that that's really not coming through. So how should one look at the restructured book? Of course, you've given some clarity on focus on that segment.
What I said is we have already about 600 crores restructured invoked book. So my intention was, my effort was in the direction to what extent we can contain that. So as against 600 crores invoked book, eventually only 330 crores got implemented. So we have been able to recover and keep those accounts regular, amounting to around 270 crores without opting for the restructuring.
Okay. All right, sir. Thank you. Thank you for your answers and the patience. Thank you.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Yes, thanks to all the participants for their keen interest, as well as making a very thorough analysis of the results and passing on their inputs, which is very, very valuable for me also. Almost all of you have appreciated the consistent performance of the bank. I am thankful to each one of you. Thank you.
Thank you. On behalf of Investec Capital, sir. On behalf of Karnataka Bank, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.